reaction to the Reserve Bank policy and the budget, Uday Kotak, Managing Director of Kotak Mahindra Bank, hinted that we may be at the end of the rate cut cycle. I think the writing is on the wall. Let's listen in to this, an excerpt of this chat he had with Shireen Bhan. She began by asking him about his take on the policy.
Sense I get is RBI is moving to a more flexible approach depending on how it sees inflation and core inflation. And you have to keep in mind you're seeing commodity prices worldwide getting firmer. You have the US undergoing a change, including potential of both monetary policy getting tighter as well as more loose fiscal policy potentially as it invests in infrastructure. So the RBI has moved to a neutral stance based on what they have announced today, and therefore it really depends on how things go from here, and a neutral stance means ability to move in either direction.
Well, the possibility of actually moving up and not cutting rates, given the fact that we are seeing some of these events that you listed out, hardening of crude oil prices, the volatility as far as exchange rates, etc. are concerned, which could have an upward impact on inflation. Do you think the possibility of rates moving higher as opposed to lower stand higher today?
I would not venture to say that, because I think we're also talking about the theme of getting growth back. So having said that, you must keep in mind RBI's mandate from the Parliament has changed. It is inflation targeting, as is almost a single objective, which is 4 plus minus 2. And if that is the direction we go, obviously the level of inflation will be significantly more important in RBI's scheme of things as it goes forward. I would say at this point of time, we are probably at a truly neutral position. And on the lower side, at the best, there could be a 25 basis points cut. And my view is we are moving into stable situation. I do not see rate hikes yet in a hurry.
Okay, so no rate hikes yet in a hurry. That's the word coming in from Uday Kotak. You'll hear a lot of excerpts of that conversation through the day on CNBC TV 18. We'll take